Welcome back. Time for today's three-stock lunch. And we have Lee on set with us we really should have had lunch anyway. First up, we have Microsoft today, which is among the top gainers on the Dow after Piper Sandler named it the highest conviction large cap name to own into year end. They also obviously just finalized their acquisition of video game publisher Activision Blizzard last week after months of regulatory hurdles. As I mentioned, Lee Munson is back on set with us. Here with our trades, he is president and CIO of Portfolio Wealth Advisors. All right, Microsoft, what do you do?
Nobody has more hesitancy about buying the Magnificent Seven than me. I'm sort of a value-oriented player, but let's be real. This is a game changer. I think Copilot, which is this little add-on AI thing that's going to go on to Microsoft Office, I think that that's going to be where they're going to monetize over the next couple of years. Now, here's the problem. There's a lot of people on the street are saying, well, they're losing money, $20 to $80 per person because it costs so much to do this AI stuff.
Wow, is that true? They're going to
lose it is. And so when you think about that type of money loss, I think that investors, next Tuesday we're going to see earnings. I think they're going to be much more put it this way, I think they're going to have the kid gloves on versus, say, Facebook with the metaverse. Because who cares about the metaverse? I want something that will make me a better writer and better grammar so my wife doesn't have to edit all my CIO notes. So I think that the main thing is how are investors going to react to Azure, which we know is slowing down? It's second rate compared to Amazon Cloud. And are they going to focus on what Copilot can do, and are they also going to give it a pass card on the losses?
Totally.
So while I'm not saying go buy it today, I would love to consider Lee Munson buying one of the Magnificent Seven after we see next earnings and see if investors say, hey, listen, we see the future, and this is an actual AI thing that could actually make money. And also, I could care less about what OpenAI is worth. Some people say it's worth $100 billion. Microsoft is $2.5 trillion. I don't care if they're going to add on $100 billion. That's not what the point is.
Yeah.
Well, let's move on to Charles Schwab. It's one of the top performers, the S&P 500, after posting third quarter earnings that beat estimates. Though net income did fall by 44% year over year, you've got falling income that beats estimates. That's always kind of a squirrely recipe to me.
Yeah. I think you have to look at Schwab. As far as the banking situation, it's going to have more pain going forward until interest rates change. But I don't think that's what the story about Schwab is. It's down 35% for the year. They also, a lot of traders got spooked last month because their net new assets went negative. That's because of the merger with TD Ameritrade. Now, what people don't get is that with that merger of TD Ameritrade, they got this thing called Thinkorswim. It's a trading platform, and it's hot. It's like the category killer. So now Schwab has the category killer for both retail trading and, let's be honest, they've got a big pocket where they can put a lot of money into R&D and really make that thing sing. The other thing is, not a lot of retail investors know, but RAs, like people like me, we use a program called iRebal, and it's our trade management software. A lot of us went to TD Ameritrade specifically to get that software. Now that it's over at Schwab, and you're an RA that wants to get busy with trading and do, thousands of trades at the same time, they've got the only place in town.
That's the platform, then.
That's the platform.
That's the platform. And, of course, Charles Schwab has a lot of custody arrangements with RAs just like you.
Yeah,
right?
And they did not get the fallout that some thought when they had that big merger. For me, we used, just for full disclosure, I was with TD, now I'm with Schwab. The transition was very smooth, it's great, and all the kinks got out very quickly. So I think that we're going to go back to net new assets going upward, and I think that you're going to continue. I mean, it's the category killer.
Speaking of category killers, one all of its own, Lululemon. The shares are up 10% today on news it'll be added to the S&P. There's a lot of value players who like to actually buy the stuff that's like leaving the S&P when all the indexes have to sell it and the price goes down and they go, this is dumb. Why, Yeah. So putting aside, whether or not it's going to keep rising because of index inclusion, do you think that this represents fair value when you buy the stock here?
No, I mean, it's up almost like, 9 or 10%. Wait until it backs off a little bit. Wait, just give it a week or two. Here's the thing with Lululemon. I understand if you look at the PE compared to, other firms, it's very high. But when you look at the cash flow, it's not as pricey as, say, it's as pricey as, say, a Nike. What I love about Lulu, and sometimes you just have to hold your nose and buy. When we go into a recession next year, there's going to be certain things that people are going to retain for their premium thing, right? They may trade down in other ways, but the two areas they're not going to trade down are their yoga clothes, right? And also, Nike, for instance. The cool thing about Lulu is my daughter loves this stuff. She's 15, and she is not put off by the fact that her father also likes Lululemon. She doesn't care. It's not a big deal. And I think so when you look at what you want to own going into recession, multiples aside, you have to decide what are people going to continue to pay a premium on. And I think that the Lulus of the world, I think the Starbucks of the world, I think the Nikes of the world, that's where you do it. So if you really want to be a value player, just wait for a bad week on Wall Street, hold your nose and buy. It's like the last 20 years. When Starbucks hits the skids, you buy a little bit because it never goes on sale.
You go to the mall. You remember malls?
I do go to the mall still.
Malls?
My 11-year-old son just discovered malls. He loves them.
There are two stores that are always crowded. One is Lululemon, the other is the Apple store. Say no more. I'm there. Lee Munson. Thanks, my friend.
Thank you.